Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, another tech record as more firms urge investors to continue to buy stocks. We'll ask the committee if they agree, what their best strategy is right now. Joining me for the hour, Josh Brown, Jason Snipe, Kevin Simpson, Britton Talkington. We will check the markets. We did tell you that the NASDAQ did hit a record high again. We're green across the board, not big moves in either direction, but there you see them. JP Morgan today. Josh says equity inflows could mean stocks go another 5 to 10% by year end. HSBC today says to buy more. Welcome back. It's good to have you back. The most dangerous place probably to be today is between Josh Brown and a television camera after a vacation. So welcome back, and the floor is yours, sir.
I'm really happy to be back, and I read all the notes that we're going to talk about today. And I think the thing that's fundamentally really important to understand, the strategist has a very tricky job. They obviously can't see the future, and they have to think big, and they have to think about, all right, it's July, what do things look like? Within the next 6 months, how do we end the year? What are some of the stumbling blocks that we might need to get past? And then what is like the chronological setup? You've got an earnings quarter about to get underway. This should be a fairly good earnings quarter if consensus is even close to what the numbers will end up being. There might be a surprise here and there with a tariff announcement, et cetera, et cetera. But like they have to skip to the end. And they have to do so in a nonsensical way. So they build this framework. And the framework has to have something to do with earnings and something to do with the rate outlook. And when you do that and you realize that one of the biggest risks to this market that we were all worried about, as you all know, the tariff thing, as you realize that that's sort of petering out and it's still with us and it still could produce shocks, but it's probably not going to be a worst case scenario, then what are you really worried about? Like, other than the typical exogenous event that no one can predict, what's the real thing that you're worried about? Because we got through the tax debate, okay? Mm-hmm. This was a big one, and we got through it. We've gotten through several earnings quarters, the last 2 quarters, where the upside surprises were wild. But wild upside surprises. We got through the concerns about, is the AI theme going to have legs this year, or did everyone shoot their wad last year? Now we know that's not true. They have to spend just to maintain the spending they already committed to doing. So when you realize that that's the setup and which stocks are most important to the index level returns, that's where you get to a place where the analysts are saying, okay, no worst case scenario on trade, no problem with the tax bill, earnings are surprising to the upside, economy's holding up. Yeah, I'm at $6,900 for next year. Yeah, I'm at $6,100 for this year. Why wouldn't I be? And so I think that's the way you want to interpret this as somebody managing your own money. Why are they arriving at that conclusion?
I mean, the president's noticed the market, obviously. He posted on Truth Social a little bit earlier, quote, tech stocks, industrial stocks, NASDAQ hit all-time record highs, crypto through the roof, Nvidia up 47% since Trump tariffs. Of course, that ignores the fact that the announcement of the tariffs crushed the stock market, but that's neither here nor there. He said the U.S. is back. He says no inflation. He wants rates lower. So it's gotten his attention too, Bryn. Are we supposed to continue to buy stocks?
I think so. I think the pain trade is people that are trying to, we'll say, time the market or sit in cash or overweight bonds. I think that while the market has largely become anesthetized to the tariff letters, the threats, et cetera, what's interesting, who hasn't become anesthetized to it is the Federal Reserve Chairman, Jay Powell. And so I think the irony, if we would actually have just had 10% tariffs move on and just be settled out, I think the Fed would be set to start cutting rates ASAP because we can, right? And so if you look at the yield curve, there's plenty of room to cut rates. But the Fed Jay Powell clearly says that we don't know about tariffs. So I think that that's going to be, we'll say, the juxtaposition this year is between tariffs and rates. And I do think ultimately we'll get 1 or 2 rate cuts, which then goes into, if earnings are strong, we get 1 or 2 rate cuts. And to Josh's point, barring an exogenous event, that just should lead stocks higher. Whether it's in a linear path is anyone's guess, but it does feel like the market should be higher 6 months from now.
President should have gone even one better. Jason, I mean, Nvidia's up 88% since the April low. It's even more impressive of what has happened. And by the way, as that stock got within 3 cents of another new high, and maybe it actually did hit it now, it was reiterated sell today. $100 is the target. Seaport Research, that's a 38% downside from here. What do you think about that? I mean, we've had some calls on some high-flying stocks of late to maybe take some of the, and some of the analysts might froth off, but I don't know what you think about this call.
Fine. Seaport's been busy over the last couple of weeks. I think they also downgraded Netflix recently. So what I would say about that call, first of all, data center momentum is still very much intact. Growing demand for sovereign AI. We've seen that with all the Middle East deals. And this Blackwell Ultra chip, from a production standpoint, is 50% stronger than the last iteration of it. So when I look at sales going forward, again, we saw a double in 24 and 25, right? Sales rising 52% in 2026, 22% in 2027. So yes, there is somewhat of a slowdown, but in my view, they still are the flag runner here, and I think that from an innovations perspective, they're still very much motivated to continue to run the story the way they have.
5 to 10% for stocks by year end from here. I've had people tell me 7,000 doesn't sound crazy. You're at 60, almost 6,300. 7,000 sound possible to you? Is HSBC correct to say buy more? They increased their overweight to equities further. They now prefer U.S. equities the most, which is interesting because you've had other calls too that the better value exists internationally. They say risk assets are set to remain supported with lower sensitivity to tariffs, and the Q2 reporting season is key catalysts.
Here's why I think 7,000 this year is a little bit of a stretch, although I'm certain that we'll get there soon enough. Everything Bryn said was right. The Fed is restrictive. The Fed does want to cut rates, but the problem is that because tariffs still exist, even if we're all ignoring them and most of the people on the floor are ignoring it, there's an August 1st date now that's out. So if you're a Fed chair and you're Chairman Powell, you're going to want to at least see 1 or 2 months of data to prove that the inflation isn't tariff-driven. So that takes us to September at best for a rate cut. We're not getting one in July. We may get one more at the end of the year. We could get 2, but it's going to be tough for the market to get to 7,000 this year if we're not having a pull forward on rate cuts. I
mean, but and by the way, if you have a 10,000, if you have a 10% increase between now and year end, you're basically there. You're on the doorstep of 7K. Josh, on the
rate cut doesn't matter.
The S&P.
Yeah, nobody should be baking in any specific number of rate cuts as a means to say stocks therefore are 8 to 10% undervalued. Like that should not be the bull case that we're going to get like accommodative policy because the employment situation is going to start to suck. Mm-hmm. That's just it. The logic is completely backwards. Nobody should root for medicine. Look, rates are probably too high. Let's all agree, okay? Probably, given the actual GDP growth rate and maybe given some of the softening in initial claims, which honestly is not that bad, but fine. Let's just say they were a little bit restrictive. Are they 200 basis points over where they should be? No, I don't think anybody would say that. And you didn't need rate cuts this entire rally. So what are you begging for Sudafed for? I don't understand it. So that's number one. Number two, more important than any of that, is whether or not the Capex theme holds up, because that's what's driving earnings, and that's what's driving the $2, $3, $4 trillion stocks that matter the most to the market cap. By the way, also driving the financial sector, all the M&A, all the venture-backed startup stuff, the IPO window being flung open, all of it is coming from Capex. And I'll tell you something else that's not popular, but I'm going to say it. It's also driving the consumer spending. I watched TV this morning. The Delta CEO was on Squawk talking about the K-shaped recovery. They had 3 different guests in a row, Bank of America, talking about it. Look, it's the top 20% of the country that's accelerating their spending. They're not doing that magically in a void. They're doing that because of what their brokerage accounts look like. Every morning when they open up the app, they're doing that because of what their 401k balances look like. That's why they're accelerating their spending on travel and luxury and services. So if you tell me that you think the AI Capex tailwind holds up, then the domino effect for all of that is, well, the consumer spend is going to be fine.
Okay.
The leisure economy is going to be fine. Retail is going to be fine. Restaurants going to be fine. And that's the way that you need to think. Not, oh my God, I need my rate cut. What's wrong with you?
I'll give you something on that. Piper today says their latest CIO survey reinforced a bullish spending backdrop for AI infrastructure, i.e. Capex, right? They raised their price target on Microsoft to 600. It was 475 prior. They raised their estimates. They upgrade Oracle to overweight. 270 is the price target. 190 was prior. If you look at the performance of AI infrastructure stocks since the April low, it's the power providers. It is the cloud providers. It is a Dell, Bryn, up 76%. It is Vistra and Vertiv, up 90 and 87%, respectively. It is Constellation, up 68%, Arista and Marvell, and that's just to name a handful and an extra one. But that's where the money is. You go where the money's going, right?
Absolutely. I mean, and I think that from the CapEx spend, I mean, we already know, we talked about this the other day, when Mark Zuckerberg is paying multiple engineers $100 million signing bonuses, CapEx is, I think, going to continue to ramp up. And so, you know, Satya talks about being, with the spend having like a high ROI, which is great. I think investors want to hear that. But I think with these big hyperscalers, the spend is just going to continue. I think that's why CoreWeave bought Core Scientific, because they need to control energy to build more. And so I do think, you know, Nvidia's numbers don't come out till the end of August, but over the next couple of weeks, we're going to hear from all the hyperscalers, and I think they're going to reaffirm the spend. And you can list off those names again, or look at those names. All those names you just listed, the Vistra, the Dell, Oracle, et cetera, are going to be the beneficiaries of those. And I think, so you're going to continue to see that. I will say one thing on rates. You know, the CPI is at what, 2.5%? Fed funds are at 4.5%. Rates should be coming down, right? That's just like simple math. And I think that if it does come down, that will continue to push the market higher.
Yeah. Jason, you and Kevin both own Oracle. You guys own Microsoft. Bryn does as well. Do you just continue to lean into these trades?
I think you have to. I think, to Josh's point, when you talk about Capex, and when I think about it and look at these stocks and look at the reports, you know, I lean into RPO. RPO, which is remaining performance obligations, is up 34% for Microsoft. This is a huge company. That's $315 billion. So we talk about capacity constraints and what these companies are, the backloads are. I mean, demand is insatiable. So you look at that and you look at Oracle, same story. RPO is up 31%. That's over $100 billion of business that is due. That they need to kind of get through and get execute on. So for me, yes, that's what's driving the story, and I think it continues.
All right. So the hyperscalers, they continue to spend, or certainly are weighing the possibility of doing that to even higher degrees. Amazon weighing further investment in Anthropic. That's according to the FT. JP Morgan's Retail Radar says Amazon replaced Nvidia as the most bought stock last week. Prime Day wasn't off to a great start. Sales down 41% on the first day. But again, are we talking about Amazon as the principal story is not about the marketplace?
No.
It's about the AI marketplace.
You don't even make money on that.
It's like the AI marketplace, which they literally, as the AWS CEO told us a few weeks back on the West Coast, that's what they're aiming to now build.
Yep.
Yeah, I think that's right. And this is the name. Look, I'm obviously, everyone knows I'm long Nvidia, and I'm not rooting for there to be more competition on the GPU and training and inferencing chip side. But I do think, like, Amazon very seriously is week after week making AI or AI adjacent announcements on the hardware side that are really important. Like, they're talking about their own chip cooling equipment right now because of how much usage there is in the data centers that they've already invested in. This is a really interesting situation because they've got that infrastructure and now they're spending to support it. But while they're doing that, they're finding ways to continue to innovate and bring more and more in-house. Like, Amazon as a hardware builder for the AI revolution is not really a thing that a lot of people had on their bingo card 6 months ago, but we have to start thinking of this company this way. And when you do, the only thing you can conclude is it might actually be undervalued if you're thinking in 5 and 10 year increments. So Amazon's a big position for me personally. I've been adding to it. I've talked about this name as a name that could surprise in the second half to the upside. I also said that in December for the first half, and I was wrong. So I'm redoing that call. But I really think Amazon's not getting enough credit for how important AWS is going to be for this AI, the remainder of the AI decade.
Kev, Alphabet, tactical outperform. Evercore ISI, that's ahead of their earnings, which are obviously in a few weeks. Meta, the target to 765 from 690. That's reiterated by at Bank of America. You own both.
We talked a lot about Google and their loss of the search monopoly. Perplexity's bringing in a search engine. We know what's happening with OpenAI search. I think Google still has 60% of AI search, which is very powerful, but it's branching out into all the other things. Everything that Josh said about Amazon is why I like it. The Prime week, the Prime month is not as important as the ad revenue that you get for the ad eyeballs that come there. Everything else that they're doing. You didn't mention robotics or all of the other things that they're doing. Satellites, really going after Tesla. Meta is my top pick for the year.
Drone delivery. Yeah, the list is so long.
The best thing about this show is that I think all the viewers already own these names, so we're not looking at it to say, well, should we be buying these companies?
Hidden gem, Amazon and Alphabet.
adding to or not is the question.
Right.
When you're at record highs, when you have a sector like tech and stocks like these, not Alphabet specific,
so for all
obviously.
of them across the board, you wait for pullbacks and you can add to them 100%. I don't think you need to chase them here, because when you talk about where these things have come from April, the lows, it's incredible. But the 5-year trajectory, to me, is so exciting. I just can't wait till next week when we've got earnings.
Well, let me ask you this. By virtue of our conversation alone, we're 16 and a half minutes into our program today. It's been concentrated, hasn't it? All over big tech. And how can't it be? That's where the action is, which is also concentrated in the market, which people say the market is too extreme. Like Apollo today. S&P 500 concentration has returned to extreme levels. It's not good for investors seeking to diversify their investments across 500 different companies. Anyone investing in the S&P, they say today, is basically making a bet on the Mag 7 stocks propelling even higher. Okay. That's true.
This is because they're pitching private equity. The reality is, I heard all of that, like, oh, if Apple stumbles, then all these people who are invested in the S&P, they're going to have a lost decade, or they're not going to make. No, what actually ends up happening is Apple stumbles and Oracle comes along. Like that is not. It's fundamentally not how it works. That you have to have Mag 7 continuously doing 20% every year in order to make money as an investor in large cap U.S. stocks. I know people want it to be that way so they can sell an alternative, or they can get you into a small cap fund, or they could get you into a buffer ETF.
They're not the only ones saying that the market, though, is too concentrated. If you look at the outperformance.
No, it is too concentrated, but here's the thing. It's not as concentrated. All right, this is what I want to say. Forget everything I just said. Listen up. This is just not my opinion. It's the mathematics. The concentration of the Mag 7 as a percentage of the S&P is lower at this 52-week all-time high than it was at the 21 peak.
Or 2023.
Or 23, for that matter. Thank you. So if you don't like concentration, I don't either. The good news is it's becoming less so. And why? Not because these stocks, Nvidia is not shrinking. The reason why is you've got this second tier below the Mag 7, the Mag 50, whatever you want to call it. Names like CrowdStrike and Netflix and Spotify, not in the index, but you get the point. You've got Oracle, you've got all of these other market caps that have grown alongside the Mag 7, and in some cases have grown at a faster rate. So it's not an all-in bet on Microsoft and Apple to the extent that it was 4 years ago.
Financials and industrials.
Yeah. JP Morgan's at 800 billion. Thank you. JP Morgan, this is the best setup man in the business, by the way. JP, well, do you know the human head weighs 8 pounds, Jerry? No. Do you know that JP Morgan has outperformed 5 of the Magnificent 7 over the last 5 years? Not a lot of people even know that. JP Morgan is almost $1 trillion. Berkshire Hathaway hit $1 trillion. These are S&P 500
right,
names.
but you're highlighting the fact
it's
that
not
this
as concentrated
has been,
as you think.
It's not concentrated solely in big tech. It is concentrated at cap size on the cap scale. Okay, Goldman and JPM and Caterpillar
so is the economy.
and Netflix and all these kinds of stocks. Those are the ones that have driven the bus.
That's every bull market. That's every bull market in history. 1960s, 1980s, That's number one. Two, at least you've got sector dispersion now amongst these mega caps, and we're not just talking about iPhones and social media.
Well, what about this hot shot? The high beta ETF. Okay, that's at a record high. 12 positive days of the past 13 is what it is going for. There are some who are negative on the high vol trade. Some would say one of the knocks on this move, if you go outside of large stocks, like we just said, are lower quality, higher beta names have really gone parabolic in some respects, and that's a risk.
You and I have been here together for a long time. Didn't they say this was the problem in 2013?
2000 or 99.
I mean, there are times where it's a problem and times where it doesn't matter.
And it doesn't matter now?
I'm
not saying it matters. I'm asking you guys. Does it matter or not?
Didn't they do this in 2017? Small caps aren't keeping up. Didn't they do it in 2019? You still had plus 30% years for the S&P in those years. Did you have small cap participation every year that you had an S&P double-digit rally? No, you didn't. Get over it.
No, I'm talking about,
you're not guaranteed that.
Palantir's done well. The ARC innovation funds at a 52-week high-ish. You bought more DraftKings. DraftKings is up 14% in a month.
It's great when you can have these mid-cap, small-cap names ride the coattails. But, I mean, your true investment are in the large cap. It's fun to get into some of these smaller names. We bought DraftKings. To your point, it's up 14%. I like the momentum. But this is like a duopoly. They have 80% of the market share combined with the other name. DraftKings and FanDuel. Thank you. Yeah, FanDuel. So 80%. You've only got 25 states so far for DraftKings, plus DC. Missouri might be opening up, but there's such a potential there. So I really like the space, and I think it's fun to own some of these names. But that's not where you make your investments. You make your investments in large.
Speaking of large, speaking of that, good segue. Back to Bryn for a move. And you alluded to this yesterday when you were with us, or the day before. I can't remember. You were on the last couple of days talking about different stocks. Tesla, you did buy more, as you said you were going to. It was on Monday. You bought it at $293. You sold the August 320s and collected $14.50. Why is now the right time to make that trade?
I think Kevin should do that trade too, or should have. Well, so I think that was the day that his American Party,
Maybe already did.
Right? That was the day his American Party announcement came out. And so I just thought that I was surprised, once again, that everyone was surprised that he would do something like this, and I thought it was an overreaction. So I'm happy to own the name below 300, and the call premium's so high. So if it gets called away in August, which is 6 weeks away, I'll have made 14% in 6 weeks. If not, it'll lower my cost basis on this new trade by 14 points. So I think it was a win-win either way. I'm comfortable trading this name. I feel like that 250, 260 to 350. 360 is the range, and it's so big. So it's just a great opportunity to buy the name, sell some calls. And if it gets called away, it was a good short-term trade.
Bryn just loves the smoke. She likes the. I think you're addicted to the drama here. Can I do like a very quick Tesla Uber thing?
Yeah, go ahead, because
all right.
Uber was reiterated neutral by Ives.
Yeah, I'm going to call him later. I don't like that.
And Tesla was reiterated underweight at Wells.
Right. So Ives, this is the only stock Ives and I disagree on, and he's made his bed with like the Tesla call, and I understand that he's more bullish on Tesla, and Uber's gone up a lot more. So maybe tactically he might get this one right. I don't have as good a handle on Tesla as he does. I would just point out Tesla's negative 25% this year. Uber's plus 60. Total return for the last 3 years. Uber is now better than Tesla, up 328%, Tesla up 31%. But then the 5-year is where Tesla has still been the better stock, obviously the more exciting stock. But like the more time goes on, the more people are starting to recognize that not every business Tesla decides they're going to get into do they become as dominant as they did on the EV side. And they're not even as dominant on the EV side that most people would have said they were 18 months ago even. So I think that's where the street is starting to wake up to this. I think there's a world in which both Tesla and Uber make a lot of money and do very well in robo-taxis. But I have to be honest with you, the cost for Tesla to scale up its own network with no partners and the amount of time toward payback is like an incredible dollar figure. And in Uber's case, they can add EVs to the network right now, and it costs them effectively nothing. Might even save them money relative to the take rate of human drivers. You're telling me you think Tesla's better positioned than Uber for autonomous driving? Like how? Like literally tell me how. And I'm sure Dan has a great answer to that, but I haven't heard it.
All right, so we're going to take a break. All right, welcome back. Let's talk Costco. The real headline here is that their U.S. core comps came in light, 5.5% versus the estimate of 6%. JP Morgan still reiterates overweight. It's probably why the stock is modestly lower today. Not horrible, but a miss nonetheless. Jason Snipe, you on the name.
Yeah, and we got our June sales the other day, which were up 8%, which broke a 5-month streak of decelerating sales growth. So for me, this is a company that manages their costs very well. They got the annuity stream and membership income. They are catering to the higher end of the consumer base. So I continue to like this, despite the news that we saw this morning.
Carlyle upgraded to buy at Citi today. Price target to 65 from 44. We can take a look at that. So it's way past the 44. Obviously, they think it's going to 65. That's a 52-week high today from Carlyle, and that's your name, Josh Brown.
Yeah, look, this is one of the best globally, one of the best private investment platforms that exist. I've talked about Harvey Schwartz before on the show. I think he's somebody who understands where the industry is going, where the next generation of wealth, how they want to invest, what vehicles will be needed. And I think these stocks are generally pretty pro-cyclical. So when you get a bull market in traditional stocks and bonds, and you get the IPO window reopens and people feel better about deal making, these are all the preconditions you need for private equity names like Carlyle to rally, and that's the setup right now this summer.
So you don't like when private equity weighs in on market concentration, but you like when there's an upgrade to the stocks.
I'm just telling you, if you're trying to sell interval funds to people, you have to convince them to do something other than Nvidia, Apple.
I couldn't resist. Apollo, target raised to 170, Bryn. KKR, target to 160. You have both.
Yeah, I mean, I think like Carlyle, these stocks have all been really good performers over the past 3 and 5 years. We do a lot of private investments, but we don't think private equity in general is a great asset class for private clients because you have like a 15-year journey. There's a ton of dry powder, but all of these companies, especially Apollo and KKR, are raising new funds. We know we're going to get those management fees for sure, incentive fees in the future. And so I think owning Apollo and KKR, Carlyle as well, is a better way for private clients than just owning a bunch of private equity that you don't have any liquidity in.
All right, McDonald's upgraded to buy today at Goldman Sachs. 345 is the price target, Kevin. They like the snack wrap returning. And they say they believe MCD ultimately has the scale marketing digital advantage to successfully navigate the environment.
Yeah, I think the price target's a little generous. You know, we've seen so many times where we get a 320, 330, 340 price target at McDonald's over the years, and it stalls at 300.
Generous? It's like stocks at $300,
yeah,
345.
It's always 300, and I say that as a shareholder. I mean, it's hard to get off that. But what I do agree with in the note is the digital scaling. They have 150 million active users in their website, into their honor system, award system. They're trying to get to 250 million. That's really, I think, the gem in there for them to get to that 345 mark.
Okay. Do you think JP Morgan is too generous when it comes to Caterpillar and the target, which just went to 475? From 395, it stocks at 410.
No, not at all. I think this is a real gem, a real hidden diamond in the rough when you're talking about like a sneaky AI play from a data center standpoint.
How sneaky is it? Stock's been like at a high.
Well, we think of it as an industrial play, but I'm talking about from like literally building the data centers. So you get a spillover effect there. Josh talked about financials earlier. I think there's a way you can play industrials. That's why these sectors are going up with it. I totally agree with the target.
Okay, sorry. Chevron, maintained by B of A, 170 price target. Josh, you own it?
Yeah. So I first bought it right before the Rose Garden tariff debacle. So I was down 18% in the stock, like in literally minutes. I couldn't believe my timing. But I did add to it during the month of April, and it looks much better today than it looked then. But I didn't understand the sell-off in the stock. Fundamentally, it made no sense to me. And I guess it didn't to the rest of the market because it has recovered. But you could see there's still plenty of room. But I think the story here is always going to be a total return story. It's a massive buyback. It's a huge dividend. It's not the sexiest business in the world, but it is, I think, the best run version of a large oil company, and it's a part of a portfolio. It's not the focus of my portfolio, but I'm here.
All right. We told you Josh Brown has a new name to add to his best stocks in the market. It is ticker symbol ANSS.
Yes.
It hit a 52-week high today. Talk to me.
Yeah, so this is a name that I don't think I've ever heard mentioned on the show, ANSYS. A lot of people know Autodesk. We're talking about computer-assisted design, but ANSYS specifically is like the world leader in simulation. So in order to develop any product, you have to take a lot of risk out before you put, millions, hundreds of millions, billions of dollars of investment capital on the line. You have to simulate what's going to happen to that product under a range of conditions, depending on what you're doing. Are you doing semiconductors? Apple and Qualcomm turned to ANSYS for their help to simulate during the development of the 5G chips. Are you doing EVs? Lucid, when they were developing the Lucid Air luxury EV, turned to ANSYS for help with simulation. So that's what this business is about. It's a niche, but they own their niche. And I want to pull back to a little bit of a longer-term chart here because I really like setups like these. This is a stock that made a new high in 2021, like every other software stock, and it has since spent the last 4 years in a huge consolidation. The thing is, the business is a much better business today than it was the last time this stock was approaching the $400 level. Company has gone from $496 million in operating earnings back then, 5 years ago, to $717 million last year. EBIT per employee is now $121,000. This is a better gross margin situation than Autodesk, but also ServiceNow, Workday, Datadog, a whole list of software companies that have a higher valuation. So ANSYS right now is really interesting. It's clearing near-term resistance. I think as it approaches 400, might be another wave of resistance from those old highs. But assuming the fundamentals hold up and the earnings reports continue to come in the way they have, I think the stock could clear it. On a risk management basis, Judge, I'd be looking at that 350 as my pivot point. That's the bottom of the gap higher after the last time they reported. If it can hold 350, I think you want to stay long. If it breaks below, make other arrangements.
All right. Two more moves. Kevin Simpson bought more Merck. Why did you do that?
Real quick refresher, we had stopped out of the position last year in the 100s. We added a little bit last month in the mid-70s. We thought the acquisition yesterday of Verona, Scott, was the right move. For them to be making these types of big acquisitions is what they need to do if they want to replace Keytruda. And it's possible that this new COPD drug can be a $4 billion product between now and 2030.
I see a little dose of red on the left. Can we throw that back up, please? But give me like a 2-day. Did the market not was it down on the deal or no?
No, it was up nicely yesterday, and we bought it as a result of that. I mean, I think this is something where you've got a company that's trading at a 9 multiple with a 4% dividend. They're showing that they can get into the acquisition business, and without that, there's no hope for them.
Stock's up 5% this week. Okay, so it likes the deal, and you like it. Bryn, what's your final trade today?
AbbVie, it's a name I'm looking to get back into. I think it break above 197. I think it marches towards its all-time high.
That seems to be a popular name among the committee. Who's got Boeing?
I have Boeing, Scott.
Okay.
This is no longer a turnaround story. It's a legit recovery. Max orders are up, and the backlog is unbelievable.
Oracle?
Oracle, that's me. I really like this Stargate project. That's a big deal. Hang on to this one.
Yeah, we've been talking about that's in that group. AI stocks that just continue to run. And then finally, Joby Aviation's having a nice day today, Josh Brown.
Nice couple of weeks, up at 30% since I first mentioned it on the show. The stock continues to have great headlines.
All right, good stuff. I'll see you in a couple hours on the bell. Thanks.
That was Josh Brown and guests on the halftime report earlier today. It is Thursday, July 10th. Currently, it's 4:38 p.m. as I'm recording this video. And in this video, what we're going to do is we're going to cover the indices. Okay, very important to see how the markets are performed for the day. We'll take a look at about 15 stocks and ETFs that they talked about on the show. So we're going to look at the technicals, and we're going to use the Ichimoku indicator. Okay, and we're going to also take a look at 3 of these Mag 7 stocks: Google, Tesla, and Apple. First, before we get started, let's take a look at the markets and see how they performed today, and they were all up. Basically the Dow was up 0.43%. Nasdaq dropped in the morning, as you can see, but around 10 a.m. it started to recover and was up just slightly 0.09%. S&P 500 also dropped in the morning and then recovered, up 0.27, and the Russell 2000 up 0.51%. Here's the heat map, and you can see Tesla is actually up today, 4.73%. It was one of the bigger winners. And then you've got Apple up 0.6, Google up 0.57, Nvidia was up 0.75, and Microsoft was down slightly, 0.40. Meta was down, and so were some of the stocks like Netflix, DoorDash, T-Mobile, Verizon, AT&T. So how about the sectors that were strongest? It was basic materials and industrials. Let me just refresh that. Okay. Basic materials and consumer cyclical. I had to refresh. Communication services and technology were down the most. So how are these stocks doing for the week though? This is the 1 day performance. Let's switch it to the 1 week performance. And you'll see Nvidia, for example, is up 4.36, but Tesla is down actually for the week, 1.83. What about for the month? More green. You can see Nvidia's up 15.05% for the month. Let's get into the indices now. We're going to use the Ichimoku indicator. What you see right there, I'm going to get rid of all those lines just for a moment so you can see very quickly. And I did discuss this indicator in the very prior video, so you may want to check that out, okay? I just posted an earlier video today, so check it out if you're unfamiliar with this indicator. But essentially, we want price to be above the moving averages and the Ichimoku cloud, and we want this white line, the Chico span, to be above price. That's basically pretty clear. We also want price to be above the 200-day moving average. That's important. And so you can see, I mean, we're hitting all-time highs now. This is all new for the SPY because it broke through the last level of resistance back here on June 27th, right there. That little candle broke through these highs. And so now it's off to the races. And that's a typical thing that you can see. The QQQ ETF also still strong. It was down, as you can see here, down 0.14%, which is interesting, right? The QQQ is not exactly the NASDAQ, but a lot of technology stocks, but it was down slightly, 0.14. The Dow was down the Dow Jones DIA ETF was up 0.45%. It has not taken out these prior highs of 451.34, which go back to 2024 actually. But it is still, after that little slight pullback that we just had, you can see these last few days now it's starting to recover, and it's probably going to retest that 451.34, and we're about 1.1% away. FEZ is the Euro Stocks 50 ETF, and this one pulled back a little, down 0.69% today, but it stalled right at that 60-61 level. So that's, as far as I'm concerned, still a very strong uptrend that we're in with FEZ. GRNY is the Tom Lee ETF, okay, U.S. large cap ETF. That's also doing pretty well. It was only up 0.04% today. Russell 2000 up 0.51%. I like what I'm seeing here. It's above the 200. It looks good in the daily, but as I've said in the past videos, on the weekly chart, on the higher time frame, it's still inside the Ichimoku cloud, and that tends to be a place where basically no one's in control here, neither the buyers nor sellers. It needs to break through concisively in order for us to have confirmation, at least from this indicator. It is a rules-based system. So right now, the cloud is still bearish, and price is still inside the cloud. The VIX was down 1% today. And here's a weekly chart that you're looking at. Here's a daily chart. So that's good. We want that VIX to stay at these levels. That will obviously lead the market up more. So let's hope that stays relatively, low at these levels. Don't forget, this was over here, was April 2nd. And you can see that big spike. That's what led to the price of the markets dropping. Okay, volatility and fear is what this represents right here. Let's look at the CNBC stocks now that they talked about. And I have basically highlighted with a little blue flag here on the left-hand side, the strongest on both the weekly and daily time frames. That's one of the key things that I do with when I'm analyzing stocks. I'm looking for stocks that are strong on both time frames. Okay, and I'm using the Ichimoku to help me identify that strength. I'm looking for a price to be above the cloud and moving averages. And here we are with XLF. You can see it broke back above the 52.63. It's above the moving averages here on the daily, and it's still strong on the weekly chart as well. Oracle, Jason Snipes' final trade. This is a strong uptrend that the stock is in. It was down slightly, 0.34%, but it's still very strong. And here's the weekly chart. Caterpillar on the weekly chart is stalling at this level of 411.50. What is that? 411.53. Here's the daily chart. Okay, so the question is, will it be able to break these levels? You can see that it touched right there back in 2024. And then back in November, we had that 418.40 high that needs to be taken out. If it can break through those levels, we'll probably see a continuation. But it is pretty extended also. I mean, look at this big, long, very, very long move. Sometimes it needs a little bit of a breather. We'll see what happens. Maybe we'll go sideways for a bit. SPHB is the S&P 500 high beta portfolio, and this is performing pretty well. Since the lows of April here, okay, on April 7th, it's up 58.82%. So this is a pretty good ETF. It's performed quite well. But let's not forget that it also had a big decline here from February 19th, 2025. It dropped approximately 32% in just 1.5 months. So if you can stomach that type of volatility, then you're good. But overall, it's doing pretty well. You can see it's up 1.34% today. When we look at this in comparison to the SPY, which is only up 0.28%. Let's look at CG next. That's the Carlyle Group. So this one actually broke through that prior high back from 2020, let's see, January, around late January right there. It broke through that, and that all happened today with this one single candle on Thursday. So it's above the 57.50. The question is, will it be able to hold up here above that support level? But that's a new support level that you can certainly use. 57.50 is what I'd be watching. It's kind of a bit of a parabolic move that's moved, that's had recently. So I don't know how much longer it can sustain this without actually pulling back a little bit and taking a break. But I do like it. And if we look at the weekly chart, whoops, there we go. The weekly chart, there it is. Okay, still very strong. Now it looks like it still needs to, it still has some room to get up to those prior highs. Let's take a look at those highs. They are $60.62. So that is a level I would be watching. Whoops. Hold on. Edit. Okay. Yeah, 60.62. Let's color it blue. The reason I color it blue is so that I can identify that it's a weekly level. And I'm going to do the same thing with this one here too. Since that's the candle right there that represents the high. And we can get rid of this one. That's not necessary. So, yeah, I do like what I'm seeing here with the Carlyle Group. It's pretty strong, and it's about, let's see, 3.6% away from the prior highs of 60.62. Here's another stock, ANSS, that I like quite a bit. Now this is here's a daily chart on this one. It broke these 2023. It looks like December 28th or so, around that time, late December of 2023. It broke through that level this week. You can see it broke here on Thursday last week, July 3rd. Here we are on Monday, Tuesday, Wednesday, and Thursday. So now we've got, it's where it was kind of stalling around this little area here. You can see concisive break above that. So that's very bullish. It happened with higher volume. The ADX is still moving up. That represents the momentum. And it was up 2.09%. And here's the weekly chart for you. So the next target would be 413.89, and that is approximately about 9.5% away. So I do like that one. Boeing, Kevin Simpson's final trade. This one broke through on the weekly chart above the 218. That's a 218.80. That's a daily level. Let's take a look. Yeah, it's based on that candle right there. Let me just throw that circle so you can see it. So it broke through that level. I like what I'm seeing here on both the daily and on the weekly as far as the technicals go. But it does have a negative profit margin of 16.58%. So just keep that in mind. And their next earnings are on July 30th, just 20 days from now. All right, so the rest of these now, they might have a positive chart on the daily, but maybe not so much on the weekly, or it could be a weak, daily and strong weekly chart. So let's look at this. JP Morgan. Now I actually had a position in this one I added it back on May 13th, closed out here on June 30th for an 11.3% profit. It moved up a bit. Now it's pulled back and it is retesting that Tenkinson. Has not broken above it quite yet, but it was up 1.78%. So I do like JP Morgan overall. It looks very strong on the daily and the weekly, okay? But it does need to break through that Tenkinson in my opinion. Then you've got DraftKings, which actually did break a prior high here. So you can see that right there. We've got a higher low here from the prior low. That's very bullish on the daily chart. On the weekly chart, though, Tenkinson, the faster moving average, is still under the slower one. So it's not perfect. And you have a bearish future cloud here with Span A under Span B. So that's, but we do have a bullish engulfing pattern on the weekly. You see that right there. That's very bullish right here. These two candles represent that bullish engulfing pattern. It looks a bit like, there it is right here, bullish engulfing. Let me zoom in. Small red candle followed by a large bullish candle that engulfs it. Okay. And so I do like the pattern. Okay, I do like this little pattern that you see here. So I would not be shocked to see it continue moving up next week as it's also breaking through these levels. Costco, on the other hand, down 1.21%, retesting the bottom of the cloud. It's got 200-day moving average as support right there in the daily chart. I wouldn't be jumping into that one yet. Apollo Asset Management just broke through the 200-day moving average, but it does have a high, you can see this little wick at the top is kind of a long wick. So that represents selling that took place towards the end of the day. If we look at the 5-minute chart, you can see that right there. So it moved up today, went sideways, and then started to drop. So I don't know. So that's the daily chart we're looking at. Let's look at the weekly. We're inside the Ichimoku cloud, so we don't have a buy signal on the weekly yet. McDonald's is under the Tenkinson on the weekly, so not that great. On the daily chart, it's under the cloud. No on that one. CVX, Chevron, is above the Ichimoku cloud on the 200-day moving average too. Looks pretty strong on the daily, but what about the weekly? The weekly chart, we've got a bearish future cloud here. Span A is still under Span B. Price did get above the 200 on the weekly, but we'll have to wait until tomorrow, Friday, to confirm that. This candle is still forming. It's in the process of forming, okay? And the Tenkinson is still under Kijinsen, so you're not going to get that for at least another week or two, for sure. Then you got Merck. This was Kevin Simpson. Well, it wasn't his final trade, but he did discuss this one briefly, that he bought more shares of Merck. Now, Merck has been in a decline, as you can see here, for quite a while, since this date right here, right? And you can see the trend line has been broken. Okay, that long down trend line there on the weekly chart has been broken. So would not be surprised to see a continuation to the upside, but the problem is it's got resistance at Kijinsen, the red line. It's got resistance here and there on the with the Ichimoku cloud. Span is still under price. So on the weekly, it looks pretty bearish still. On the daily chart, it's stalled right at the top of the cloud, and it's still under that declining 200. So I would not be jumping in there. How about AbbVie? On the weekly chart, above the moving averages, but Tenkinson is under Kijinsen. Bearish future cloud still. Daily chart, this was Brin's final trade, by the way. On the daily, it looks more bullish, but I think it would, at a minimum, need to also break above this prior high right here of 198.98. Okay, call it a $200, basically. Whoops. So if it can get above that level of 200, then maybe we'll see a continuation. Let's look at the 3 Mag 7 stocks. And remember, if you don't see stocks here that were covered on the show, it's probably because they're in my portfolio, and I only share that with members. If you are interested in accessing the members-only videos that I produce each weekend, okay, let me show you guys how to do it. You just come right here, and you hit the subscribe button once to subscribe for free. But then, in addition to that, you'll have to join, right? So once you subscribe, you'll see that plus sign. You click on that again, it will show up this box, right? And then you'd have to become either a Blue Cloud Trader member under this level or Blue Cloud Legend level member. If you want to get the daily trade updates as well, every day on my trades, you want to sign up for Blue Cloud Legend level membership. You won't get that under Blue Cloud Trader. So, and you'll see those posts pop up after you've become a member. There'll be a new tab popping up here, and it will look a little like this right here. And this is what the videos look like. You can scroll down and find them. Okay, now let's get back to what we're talking about. We're talking about Google, some of the Mag 7 stocks. On the weekly chart, it is inside the cloud, and so no go here for me still for Google. You get a bearish future cloud, and on the daily chart, it looks more bullish, but it's, you know, I don't have that confirmation on the weekly. Tesla, inside the cloud on the daily, and it's under the cloud on the weekly, so bearish. I would not get into Tesla now. Apple is under the Ichimoku cloud on the weekly, as you can see right there, under moving averages, and on the daily it looks more bullish, but it could be very short-lived as 200-day moving averages lurking right above. And guys, that's going to do it for this video. Thanks for watching. Thanks for supporting the channel. I appreciate all of you. Don't forget to hit the like and subscribe. Maybe share this video with someone that might be interested in seeing it. And I'll catch you guys all in the next video.